Have you ever wondered if it's really a good idea to leave your money in the bank? Hello and welcome back to Future Finance, the place where we transform your way of thinking about finance. Today, I'm going to tell you why keeping your money in the bank might not be the best option and, most importantly, I'll reveal surprising and effective alternatives for investing your money. Let's start with a reality many overlook. Banks, those large buildings where we entrust our money expecting security and perhaps some return. But did you know that in many cases, leaving your money just sitting in a bank account can be less beneficial than you think? Here's why: the interest rates offered by banks are usually very low. So low that they often don't even keep up with inflation. Often, these rates are even non-existent, charging you maintenance fees for keeping your money in the bank. This means the purchasing power of your money could be decreasing without you realizing it. Now, you might be wondering, what is inflation? Think of it as a kind of financial ghost that gradually reduces the value of your money. Imagine today you can buy 10 loaves of bread with $10, but next year, with those same $10, you might only be able to buy 8. That's inflation in action, reducing what you can get with your money. Therefore, it's crucial to look beyond the simple security offered by banks and seek options that not only protect your money but also make it grow. And this is where the investment alternatives we're going to explore together come into play. From company stocks to real estate, to more modern options like cryptocurrencies, there's a world of possibilities waiting to be discovered. So, stay with us, because we're about to embark on a fascinating journey through the world of alternative investments. Discover how you can make your money work for you, instead of just letting it sleep in a bank account. Are you ready to challenge the conventional and take control of your financial future?
Let's go!
Now that we understand why leaving your money in the bank might not be the smartest option, it's time to explore the exciting and diverse world of alternative investments. Each of these options has its own unique characteristics, advantages, and of course, associated risks. We're going to dive into these alternatives, one by one, so you can make informed decisions about where to place your money. Remember, there's no single correct answer. It's about finding the option that best suits your needs and financial goals. 1. Company stocks. Investing in stocks is like buying a small part of a company. When the company does well, you benefit too, either through an increase in the value of the stocks or through dividends that some companies pay to their shareholders. But what makes stocks an attractive option? In the long term, stocks have proven to be one of the highest return investments. Historically, they have offered higher returns than other options like bonds or savings accounts. This means that, although today you buy stocks for a certain value, that value could increase significantly over time. However, it's important to remember that investing in stocks carries its risks. The prices of stocks can fluctuate widely due to factors such as the company's performance, market conditions, and even global events. This means you could experience significant gains as well as losses. How can you start investing in stocks? The first thing is to do your homework, research and understand the companies you're interested in. Look for companies with a solid history and good future growth potential. Also, consider diversifying your investments. Don't put all your eggs in one basket. Investing in stocks can be an exciting way to actively participate in the financial markets and, if done with care and strategy, can be very rewarding in the long term. Remember, patience and research are your best allies when it comes to investing in the stock market. 2. Indexed funds. These funds are a form of investment that seeks to replicate the performance of a specific market index, such as the S&P 500 or Nasdaq. Instead of choosing individual stocks, you invest in a fund that includes many different stocks, reflecting a market index. What's the advantage of this? Indexed funds offer instant diversification. By investing in a fund that tracks an index, you automatically invest in all the companies that are part of that index. This reduces the risk involved in investing in individual stocks, as you're not depending on the success of a single company. Another important advantage of indexed funds is their passive nature. Unlike actively managed funds, where a manager makes constant decisions about what stocks to buy or sell, indexed funds simply follow the index. This generally results in lower costs for the investor, as they have much lower maintenance costs because there is no need to pay a fund manager to make investment decisions. Indexed funds are an excellent option for those who prefer an investment strategy of set and forget. Once you invest in an indexed fund, you can let your investment grow over the long term without the need to constantly monitor the market. However, it's important to keep in mind that although indexed funds tend to be less volatile than individual stocks, they are still subject to market fluctuations. Therefore, a long-term perspective is crucial when investing in indexed funds. Indexed funds offer a simple and efficient way to invest in the stock market, providing diversification and lower risk compared to investing in individual stocks. 3. Real estate. Investing in real estate can be an excellent way to generate wealth and diversify your investment portfolio. This investment option involves the purchase of physical properties, such as houses, apartments, offices, or commercial premises, with the aim of earning income from rentals or making money through the appreciation of the property's value over time. One of the biggest advantages of investing in real estate is its potential to generate passive income. If you have rental properties, you can receive a steady stream of income that can be particularly attractive for those looking to supplement their regular income. Additionally, real estate is often considered a safe and stable investment compared to the faster fluctuations of the stock and bond markets. Another positive aspect is the appreciation of value. In the long term, the value of real estate properties tends to increase, which can result in a significant profit when you decide to sell the property. In addition, there are tax benefits associated with owning real estate, such as deductions for mortgage interest and maintenance expenses. However, there are also challenges to consider. Investing in real estate requires a significant initial investment, and property management can require time and effort, especially if you're managing rentals. In addition, the real estate market can be affected by local and global economic factors, so it's not free of risks. For those who are willing to invest time and capital, and who are looking for a tangible form of investment, real estate can be a very rewarding option. It's important to do thorough research and consider both the location and the state of the real estate market before making any investment. 4. Cryptocurrencies. Cryptocurrencies such as Bitcoin and Ethereum have garnered a lot of attention in recent years. They are digital currencies that operate using blockchain technology, making them decentralized and, in theory, more secure against manipulation or government control. Investing in cryptocurrencies can be particularly attractive for their high return potential. Some cryptocurrencies have experienced significant increases in value, attracting investors looking for quick gains. In addition, the innovative nature of blockchain technology and its potential to transform various industries has generated much excitement among tech investors. However, it is crucial to understand that the cryptocurrency market is highly volatile and speculative. Prices can fluctuate enormously in very short periods, which can represent both an opportunity and a significant risk. Therefore, investing in cryptocurrencies should be approached with caution, and it is advisable that it only represents a small part of a diversified portfolio. For investors interested in exploring this market, it is important to educate themselves about how cryptocurrencies work, market trends, and associated risks. It is also vital to stay up to date with news and developments in the blockchain space, as they can significantly influence the market. Cryptocurrencies offer an exciting and cutting-edge opportunity in the world of investments, but they come with a level of risk that should not be underestimated. If you decide to dive into this world, do so with knowledge, caution, and a well-thought-out strategy. 5. Government bonds. Government bonds are essentially loans you make to the government, in exchange for which you receive regular interest payments over the life of the bond. At the end of the bond term, the government returns the principal amount you invested plus a percentage in interest. One of the main attractions of government bonds is their security. They are considered one of the safest investments, as it is very unlikely that a stable government will fail to meet its debt payments. This makes them an attractive option for conservative investors or those looking to balance riskier parts of their portfolio. Government bonds generally offer much lower returns compared to riskier options like stocks or cryptocurrencies. However, their value may lie in the stability and predictability they provide. They are an excellent way to preserve capital and obtain a steady, albeit modest, return. Moreover, government bonds can serve as a valuable tool for portfolio diversification. When combined with more volatile investments, they can help reduce the overall risk of your investment portfolio. It is important to keep in mind that bonds are subject to market and interest rate risks. If interest rates rise, the value of existing bonds tends to decrease. Therefore, although they are a safer investment, they are not completely free of risks. Government bonds can be a solid and stable part of a diversified investment strategy, particularly useful for those seeking a safer and more constant source of income. 6. Gold and other precious metals. Investing in gold, silver, and other precious metals is a practice that has stood the test of time. Traditionally, they have been considered as a store of value, especially in times of economic uncertainty or inflation. One of the reasons gold and other precious metals are attractive is their ability to act as a hedge against inflation and currency devaluations. Unlike fiat money, whose value can be eroded by inflation, precious metals tend to maintain their value over time. Additionally, gold and precious metals are seen as a tangible asset, something you can hold in your hands, which is attractive to many investors who wish to diversify their portfolios beyond digital assets or paper. Also, in times of economic or geopolitical crisis, precious metals often experience an increase in value as investors seek them out as a safe haven. However, it is important to keep in mind that, like any other investment, gold and precious metals are not free of risks. Their prices can be volatile and are influenced by a variety of global factors, including monetary policy, industrial demand, and market conditions. To invest in precious metals, you can consider various options, such as buying physical gold in the form of bars or coins, investing in funds that hold physical gold, or even buying shares in gold and silver mining companies. Gold and other precious metals can be a valuable addition to your portfolio, offering diversification benefits and acting as a potential hedge against inflation and economic uncertainty. 7. Crowdfunding and collective investment platforms. This form of investment has gained popularity in recent years, allowing investors to participate in a variety of projects and businesses that were previously inaccessible to the average investor. Crowdfunding allows individuals to invest in startups, real estate projects, and even innovative business ideas, all through online platforms. This form of investment democratizes access to capital for entrepreneurs and offers investors the opportunity to be part of something new and exciting from the start. One of the most attractive advantages of crowdfunding is the potential for high returns. By investing in a company or project in its early stages, you can benefit significantly if it is successful. Additionally, diversifying your portfolio with these types of investments can increase your chances of good returns. However, it's important to recognize that these investments carry considerable risk. Startups and new projects have a relatively high failure rate, and it might be a long time before you see any return, if at all. Therefore, thorough research and understanding of the risks before investing is crucial. When considering crowdfunding and collective investments, look for reputable platforms and projects that seem promising and well-managed. Remember, it's vital not to invest more than you're willing to lose, as the world of crowdfunding is full of uncertainties, but also exciting opportunities. 8. Startup and venture capital investment. Finally, we arrive at the 8th asset on our list. This form of investment involves putting money into new and fast-growing companies with the potential to become significant players in their respective markets. Often, these are companies looking to change the game in their industry by introducing new technologies or innovative business models. Investing in startups can be incredibly exciting. You have the opportunity to be part of a company's journey from its inception and potentially reap great rewards if the company is successful. Many of today's largest and most successful companies began as small startups that attracted visionary investors. However, it's vital to recognize that investing in startups is highly speculative and risky. Most startups do not survive their first years, and as an investor, there's a real possibility of losing your entire investment. Therefore, this form of investment requires not only capital but also a deep understanding of the market and the ability to assess a company's potential and its team. For those interested in investing in startups, it's important to diversify and not put too much capital into a single company. Also, getting involved in angel investor networks or venture capital platforms can provide access to investment opportunities and the collective wisdom of other experienced investors. Investing in startups and venture capital can be an exciting way to participate directly in innovation and entrepreneurship. Though it comes with a high level of risk, for the right investors, it can offer extraordinary rewards and the satisfaction of helping to shape the future of the industry. We have explored a variety of investment options beyond just keeping your money in the bank. As we have seen, keeping your capital in a bank account could mean missing out on growth opportunities due to low interest rates, bank charges, and the impact of inflation. Instead, considering alternatives like stocks, indexed funds, real estate, cryptocurrencies, government bonds, precious metals, crowdfunding, and startups can offer much greater growth potential and healthy diversification for your portfolio. Remember, each investment option comes with its own set of risks and benefits. The key is to research, understand your own financial goals and risk tolerance, and if possible, seek good professional financial advice. Investing wisely can help you build a more solid and secure financial future. If this video has been useful to you, please give it a like and share it with your friends or anyone you think could benefit from this information. Don't forget to subscribe to our channel for more tips and valuable information on personal finance and investments. Also, we would love to hear your opinions and experiences with alternative investments. Leave your comments below. Thank you for joining us on this journey through the world of investments. Keep being curious, keep learning, and keep growing your wealth.
See you in the next video.